Welcome to my next video, guys. I hope you're all doing well and I hope you're managing to hold up okay throughout this war. Now, I know all of you technical traders are probably having a very difficult time in the markets right now because it's very headline driven. The technical analysis is very difficult right now to solely be a technical trader. If you're like myself and you use it just for your entries, you'll be absolutely fine. But the fundamentals is absolutely key during these hard times while we've got these geopolitical tensions, and it's very important that you follow and stick to your fundamentals. We're not going to be diving into fundamentals today. I'm actually going to be teaching you some technical analysis, which is time price opportunity and market profiles. So we can use these to develop a directional bias. We can use them to develop support and resistance levels, and we can also trade inside and outside of the value area, which will make a lot more sense in a moment when I get into it in the video. For me, when I learned TPOs, the support and resistance and the directional bias, it completely changed the game for me, because with your conventional support and resistance, it's all about bounces and breaks, right? Whereas with TPOs, it's very objective. It's either there or it's not. There's no discretion involved in it like there is with your conventional support and resistance. So I found it very helpful to use as my levels to trade from rather than the conventional support and resistance. So I'm going to show you guys that, but first of all, I want to show you a quick trading strategy which is going to allow you to trade the value area. You can either trade an inside day or you can trade an outside day. I'm going to show you exactly how that works, how you can structure it into a trading plan, and then you guys can go away and test it. After that, I'm going to take you into the directional bias and also setting up your support and resistance levels with the time price opportunity and market profiles. So without any further hesitation, let's get straight into the charts. So here on the screen, we've got on the left, we've got the time price opportunity, and then on the right, we have got the market profile. So for now, just completely ignore this TPO. We're solely going to be looking at this market profile, okay? So we can see we've got the light purple on the top and the bottom, and the dark purple in the middle. The dark purple in the middle, this represents the value area. This is where 70% of the volume got traded within this current week. We're currently looking at the weekly profiles, so each pair represents 1 week of data. What we do for this trading, this strategy, is we mark up the high and we mark up the low of the value area, okay? And then we can get rid of the profiles. So you want to then mark up where the new week starts. So for us, that's here on this Sunday evening. Now what we're looking for is for price to come back to the value area, see it as an area of resistance in this case, as we've broken down below it, and then a continuation to the downside. So if we play this forward a little bit, we can see now that we've had a touch to the bottom of the value area. Now, what we need from here is a trigger to get into the trade. So this is an extremely simple strategy. Anyone can do this with just a small amount of practice, okay? So first of all, we mark up the value area. We've got that. Then we wait for a retest back to the value area, which we have now got. We've got that touch coming back to the value area. And now we're looking for a reason to get into this trade, okay? So we drop into a smaller time frame. If you're looking at the weekly profiles, you're gonna want to start on the 4 hour, wait for it to come back and touch, and then jump into the 1 hour to do your execution. So we've got a couple of options of how we can enter into this trade. We could look to enter on the break of this counter trend line here. We could look to enter on this rising wedge, which we've got here. Or if you want to be super aggressive, you could simply enter on a candlestick pattern. So the most aggressive entry, let's attack that one first, as that's the first one which has come up. So we've come up, we've tapped the bottom of our value area after breaking below it. We've now confirmed this as an area of resistance, and we could look to short it here, simply based off of this bearish engulfing candle. A bearish engulfing candle being the bearish candle making up over 100% of the bullish candle next to it. Stop loss can go above the highs, and then we could target back down to these lows. Or if you want a slightly less aggressive entry, you could wait for the break of this price pattern, this rising wedge, and it just so happens that we've also had a break of the counter trend line within the same candle, which doesn't happen very often. So you can see now how this is going to be less aggressive, but it's also more confirmed. If you wait for the break of a price pattern or the break of a counter trend line, you're going to have a higher win rate, but your risk to reward is not going to be so good. So how you can see on the first entry, just from going from the candlestick pattern, we've got a 2.57 risk to reward, where waiting for the price pattern or the counter trend line, we've only got a 1.17 risk to reward. So choosing how aggressive you want to be is very, very important. Personally, I like to be less aggressive. So I would have taken this second trade because I like to see more confirmation and have a higher win rate. It's just the way that my psychology works. And then, of course, we'll let this trade play out, and we can see that it's worked very nicely. So in terms of targets, you've got a couple of options for this. You can either target back down to the most recent low, or you can target down to an area of support and resistance, which we're going to get into a little bit later on in the video. So that is how you trade an outside day. You can trade exactly the same. If, for example, we broke out to the top, we retested back to the top of the value area, we could then look to trade this continuation here. So you can trade an outside day on either side. Preferably you're going to be trading it with the trend, although here we've managed to catch a reversion. So use that, play with it, see how you get along with it. It is a really good strategy. It's something I use quite often. I like to use it in these higher time frames. I find it's much more reliable when used in these higher time frames. So give it a spin and see what you think. And now I'm going to teach you how to trade the inside day. So trading the inside day, we start with the same setup, still just looking at the market profile and ignoring time price opportunity. So we mark the highs and the low of the value area, and then we can get rid of the market profiles off of the screen. So we want to mark up where the new week starts, which is going to be this candle. So this is the last candle on the Friday before going into the Sunday evening's trade. So what we're looking for is a false breakout to the downside, and then we can jump back into our lower time frame, so jumping into the hourly time frame. Now for this, you're a little bit more limited on your entries, whereas the outside day we had a few more entry types. For this, I'm simply just looking for a candlestick pattern. So I want the false breakout to the bottom of the value area. I want it to come back into the value area and then see the bottom or the top of the value area as support or resistance, okay? And then I'm just looking for a candlestick pattern. So here we can see that we put in a nice hammer pattern. I'd put my stop loss just below where that breaks out below the value area and rejects back up, and then target back up to the other side of the value area. So this is extremely simple. It's as basic as it comes, but can offer some really nice trading opportunities, and it comes with about a 40-45% win rate depending on the asset which you're trading it on. So we can see here how we play this through, and within a couple of hours we've gone straight to target with zero drawdown. Now you have got a couple of options on where to place your stop loss, okay? So you've got the conservative option, which is where I would be placing it, and then you've got the higher risk option where you just simply go the other side of the value area, which you can see has offered us a 3.25 risk to reward ratio. So we have gained quite a bit from having that tighter stop. You're going to get stopped out more often, but your wins are going to be bigger. So it all comes down to psychology. Are you happier having a higher win rate, or are you happier having really big wins when they do come in? So play around with both of these strategies. They are great, but now I'm going to teach you how you can combine a directional bias and other levels of support and resistance into this strategy, or you can simply use them to trade other strategies as well. So what I've taught you here, they're two individual strategies. What I'm about to teach you now is the real gold dust within time, price, opportunity and market profiles. They offer massive amounts of value, and like I said before, it's going to take the discretion away from your support and resistance. You're going to have really strong levels, and it's going to make your trading much better. I always found when I was learning that my support and resistance levels were good, but they were never absolutely solid. Combining the directional bias and the support and resistance levels can generate some really nice trades. So we're going to get into that now. I'm going to teach you everything that you need to know. So sit tight, get your pen and paper, and let's hit this together. So let me give you a quick run through on how the time price opportunity works. The graph here on the left hand side, this one here that we're looking at. So the right, we've got the market profile, which we've already been through. We've got the value area, which is the dark purple, 70% of trading. And then we've got the light purple, which represents the other 30%. You've also got the point of control in the middle here, which some people use as a support and resistance level. But for me, I don't really like it. That's just the point where the most volume was traded on that week. So on the left, we've got time price opportunity. Each block represents 30 minutes of time. So at the top here, we've got 1 hour, then we've got an hour, then we've got an hour and a half, and so on through, each block representing 30 minutes worth of time spent at that level. So we can see when we get these single prints, that means that price has moved very quickly through that area. Price wasn't happy trading there. It needed to push higher or it needed to push lower to get away from that area. Price just went zoom straight through. And this is what we call a cave, which I will come on to a little bit later on. So to start with, we're going to look at the profile shapes. So we've got quite a few shapes that we can use. Not every profile has a shape. Some of them don't have shapes. Like this one here, I wouldn't class this as any shape that we're going to go through. But this one here is called a double distribution, okay? So to make a double distribution, you need lots of time spent either side with very little time spent in the middle. That's what creates a double distribution. So double distributions can be bullish and they can be bearish. It's not a specific pattern for a specific direction, but if you look at price action here, we can see that price has moved up, and that's what's created this double distribution. If price had moved down and created this double distribution, then it would be bearish. But because it's moved up, it classes as bullish. So we're going to put double distribution in here. So double distribution, that can be a bullish signal or a bearish signal. You need to look at price action to determine which way price has moved to create this double distribution. In this one, we can clearly see that that is a very bullish move. Okay, so coming back, let's see what other patterns we can find. You'll notice I'm just skipping through a lot of these because they don't actually represent anything. And this is our next shape. So this is a D shape. Now a D shape, again, is not one of the patterns which tells us whether it's bullish or bearish, but what we're looking for here is a break of the high or the low. So once this gets set in place, we're looking for the next week to form, and we can see here it's broken down below it, and that's continued into quite a nice down move. So with the D shape, you're looking for a break above or a break below. So you'll often get a D shape when you're in a range or price is potentially going to reverse, or maybe you're just in a consolidation before it continues with the big trend. So with a D shape, you're looking for the breakout outside of it, like we see here. Comes back to it, tests it as an area of resistance, and then continues lower, comes back to it again, and then pushes lower. So you can trade this in exactly the same way that you would trade the value area. Not quite as good. I personally wouldn't trade it in that way, but I would now see the break below it and I would be looking to go short in this market, because this is both, again, bullish and bearish. It just depends on the breakout direction. So the next shape which we have come to here is a B shape. A B shape is a bearish signal. We can see here that it has gone up, but this is just to go towards our point system, which you will understand more when we get towards the end of the video. I'm going to give you my exact point system which I use to trade this market, which is incredibly valuable. So the reason why this is bearish is because there's been a lot of time spent at the bottom and not a lot of time spent at the top. So price was happy trading at these lows and then pushed higher, and not much time was spent at these highs, which creates this B shape, and that is a bearish signal. Okay, so the reverse of a B shape, of course, is a P shape. So this represents price being happy trading at the highs and didn't spend much time down at the lows. So this is a bullish signal. So you've got B shape for bearish and P shape for bullish. Okay, so that concludes the shapes which we have to go to, which if I pull up my checklist, you can see that that represents 2 points within our checklist. So this is the checklist which I use, and you can see the first two are based around profile shapes. So the first one is market profile and volume shape. So if you had a P shape in there, you would put +1. If you had a B shape in there, you would put -1. If you had a double distribution that was a bullish double distribution, you would put +1. If it was a double distribution that was bearish, you would put -1. That's how we tally up here within these points. And then for the previous day's profile shapes, you're looking for a D shape, you're looking for a P shape, double distribution, whatever it is. But this is where you can introduce the D shape. So we said before that the D shape didn't necessarily give us a bullish or a bearish signal. So when we talk about the previous profiles, I like to look at the 3 most recent profiles. And if we had a D shape and then a break below the D shape, I would put that as -1. If we had a D shape and then a break above the D shape, then I would class that as +1. If it stays inside, then it just goes down as 0. If you don't have a profile shape, then you just put it down as 0, which you will find is probably 60-70% of the time. You'll be marking this down as 0, this down as 0, and then we come on to the next part, which is an inside day. So when we're looking for an inside day, it's exactly as the name says. We're looking for it to not break out, okay? So we can see we've got this profile, the next profile is contained inside of it, and also the following one after that. So when you see an inside day, this is a signal that price is probably going to reverse. So if you're in a downtrend and you see an inside day, this is your signal to stop selling the market and potentially start looking for a buy signal. So how we would put this into our point system is we would come in here and we would have a look if our most recent profile is contained within the previous one. So if we were trading this in real time and the price stopped here, we could see that this was inside. So I would be putting this, I'd be looking back, seeing that we're in a downtrend, and I'd be thinking, okay, we've got an inside day. This is a signal that we could look to reverse from here. So we need to be careful, and we would put that down as a +1 in the box. Because we're in a downtrend, we're expecting it to reverse because of this inside day, so that becomes +1. Again, this is another one of the boxes which most of the time is probably just going to be 0, because it's not that often that you actually see an inside day. They only happen for each asset probably once a month, something along those lines. So it's something that you see occasionally, but not very often. But it's a very good indication that price is going to reverse, so you need to look to see if it is going to reverse. The next box we have is yesterday's value area compared to the day before. So this is a nice, really easy one, and it's very objective. You can't really get this wrong. You'd have to do very well to get this wrong. So we're looking at the shift in the value area. So if we're looking at this one as our previous, we can mark this up and we can see that the next one, most of the value area is trading above the previous day. So that would go down as +1. Then if we come into here, we mark up the value area, and we can see that the value area has shifted below the previous value area. So that would go down as -1. Then the next one, the value area has moved up, so that would be a +1, and so on we go. Now we've got a -1 because this one is below the previous value area. So you're looking at the previous week, Has it shifted up? Has it shifted down? Sometimes you will find that the value area is contained within inside the previous value area, and that simply just goes down as a 0. The value area hasn't shifted, so you don't need to give it a point. So that goes in here. You can mark that down as +1, -1, or you can mark it down as 0. Now, today's open versus yesterday's value area. So if we're looking at this week here, we can see that the open is contained inside of the value area. So that goes down as 0. With this one, we can see that the value area low is here and we've opened below it. So that goes down as a -1. And then for this one here, we can see that the value area is below and the market has opened above the previous week's value area. So that's a +1, that's a bullish signal. So that again goes into this one here. Now, poor highs and poor lows. This is really, really important. These can be an absolute excellent target and reason to get into a trade, okay? So what a poor high or a poor low is a minimum of 2 TPOs for 3 columns. So this here is a poor high because we've got 3 TPOs, 4 TPOs, 6 TPOs all together. So those first 3, they just need to have 2, 4, 6. They don't have to have all this extra, more the better, but it only needs to have 2, 4, 6, and that represents a poor high. Same goes for poor lows. We can see here that we have poor lows. We've got 5 TPOs, followed by 8 TPOs, followed by 10 TPOs. So that is a poor low. So what this represents, if you remember I was telling you that each square represents 30 minutes, it means that price was happy trading at that level. So what do we expect if price is happy trading at that level? Price is probably going to return to it and pass through it. So we can see here, we had poor lows that came up in this week. What did price do? It came back up to an area of resistance and then smashed through these poor lows. If you've got poor lows, that goes down as a bearish signal. So you put -1 into your checklist here. If you've got poor highs, then that's a bullish signal. You put +1 into your box here. So you're only looking at the previous 3 days. Let's say we're trading this live right now. This profile doesn't matter because it's not finished yet. We would have to be looking at this over the weekend, getting ready for our directional bias for the new week. But we can come back and we look to see, have we got any poor highs or poor lows on the previous 3? So we've got 1, 2, 3. We can see we had poor lows down here, but those poor lows have already been ran through, so that doesn't make a difference. We can see that we've got poor lows here as well, but these poor lows have already been ran through, so we can disregard that as well. Now, when I come to the charts on Sunday, I'm going to be looking at this and going, okay, we've got poor highs here. This is a bullish signal, and I could potentially use those poor highs as a target to trade up to. So depending on whether you've got poor highs or poor lows will depend if you've got 0, +1, or -1 in this box over here. Now, for the reverse of a poor high or a poor low, we have what is called excess. So excess is price not being happy trading at those levels. So to create excess, we have to have a minimum of 3 singular TPOs. So we've got excess here, we've got excess here. Price wasn't happy trading at these levels, and that is represented by these wicks. If you look at the price action, we can see it went up and then rejected away straight away. So if you've got excess at the top of your profile, that is a bearish signal. If you've got excess at the bottom of your profile, like this one here, that's a bullish signal. Price wasn't happy trading down here and then pushed up higher, actually taking out these poor highs. So you can see how by using the excess and the poor highs and lows can generate you a very nice directional bias. So again, that goes down into this system with excess. If you've got excess on the bottom, that's +1, excess on the top, that's -1. If you've got no excess, it goes down as 0. And this is exactly the same. We're looking at the 3 most recent profiles to see if they have excess or poor highs and lows. Now the final box that we've got here is higher highs, higher lows, lower highs, lower lows, higher highs, lower lows. What we're looking for here is simply a trend. So we can mark if we're in an uptrend, we mark the highs. Are we making a new high? Yes. Are we making a higher low? Yes. Then we come to the next one. Are we making a new high here? Yes. Have we made a new higher low? Yes, we have. We've moved up. So you look again at the previous three. Are we making higher highs and higher lows? If you are, then that means you're in an uptrend, that's +1. If you're making lower lows and lower highs, that means you're in a downtrend, so you put it down as -1. If it's just riding flat, something like this, and chopping all over the place, it just goes down as a 0. Okay, so now let's put everything that we've learned together, and I'm going to take you through how we do this points system in a real life situation. So first of all, we're starting with the market profile shape. Do we have a shape here? Now it's close to a D shape, but I would like to see more volume here at the top and more volume here at the bottom to create a real true D shape. So for me, I'm going to put that down as a 0 because it doesn't really represent anything. We've not got a D shape, we've certainly not got a P or a B, and we've not got a double distribution. So that will simply go down as a 0. Then we can look at the previous 3 profile shapes. So have we got anything here? We haven't got a D shape with a break higher, but what we have got here is a double distribution. It's a bit of a top heavy double distribution, but it is still a double distribution here. So I'm going to put that down as a +1 because we have this double distribution, which is a bullish signal, because we can see time was spent here and time was spent here, and the price action behind was bullish price action, which makes it a bullish double distribution. Then we can look, have we got an inside day? Was this day contained inside the last? So looking at the most recent, was it contained inside? It was very, very close, but we stick objective, and that is a break of the previous one. So that goes down as 0. We don't have an inside day. Yesterday's value area compared to the day before. So for that, we're looking at this value area and looking at this one here. Now, this is very, very close, okay? So you want the majority of it to be outside of the value area if you want it to be bearish in this case. Now, we're on the limit here. We've got probably 50-50 either side. So I'm actually going to put that down as a -1 in this situation, just because the point of control is outside and it's very 50-50. I'm going to take the bias that it's going to be a -1. Then we're looking for today's open compared to the value area. We can see that the open was below yesterday's value area. So this is the value area that we're looking at. We have to wait for this new week to start, and we can see that the open was actually below there. So that goes down as a -1. Then we're looking for the previous 3 days, poor highs and lows. Now we give priority to the most recent profile. So if you've got poor lows on the most recent profile, then you don't need to look back any further. Or if you've got poor highs, you don't need to look back any further. So with this, I do class this as a poor low. I know it's only got a single TPO here, but then it's followed by 3, which is followed by 6, which is followed by 8. So we've got quite a lot of time spent down here at these lows. Yes, it only spent 30 minutes at the lowest point, but I still believe that this is going to be a poor low, and price is going to revisit this at some point in the future. So I'm going to put that down as a -1. Now, excess. Do we have any excess? We've got 2 TPOs here, but not 3, so that doesn't work. We've got no excess here, no excess here, no excess here, and no excess here. So that means that we put that down as 0 because there's no excess. And then lastly, we're looking at the trend. Are we making higher highs, higher lows? I would say yes, we are, because we've got the low here and the high here. The high moves up to here, the low moves up to there, and then we continue a little bit higher and definitely higher there on the low. So that comes in as a +1. So then we come to the bottom and we're looking to see a score of either -3 or +3. If it's -3, then that means we're going to be looking to sell the market. If it's a +3 or higher, we're going to look to buy the market. We can see here that we've got -1, so we're sitting right now in the middle of no man's land, which means we can say, okay, we're not going to trade this. We're going to move on to the next pair and we're going to take a little look. So I go through this every single Sunday or Saturday, and I will make my directional biases, and then I will just tag them up with a blue marker if they suit the criteria. So if we come across onto one of the ones which I've got this week, you can see that I've got a TPO score of +4 and my fundamentals align. So this is something which I'm genuinely looking to trade. So if we got a retest back to this area, I'd be looking for a continuation higher, and this would be a genuine setup that I would take. So that is how you generate your directional bias with TPOs and with market profiles. Last thing we need to cover is how we create support and resistance using TPOs and the market profiles. So with this, we've got a few things which we can use. If we come onto a clean chart. So coming onto a clean chart here, what we need is we need at least 2 levels to line up. Now we've got a choice with these levels. We can use session highs and lows. We can use value area highs and value area lows. We can use caves or single prints. So with a cave or a single print, a cave looks like this, where we have a cave. A single print, now these are pretty rare, but let's see if we can find one. So single prints are very rare, especially on these weekly profiles, but this is what a single print looks like. Exactly what the name says. You've got a bunch of single prints. It only needs to be one. You can have a single print, and that will act as an area of support as well. So you want to align as many of these levels as possible together. The more levels you have combined, the stronger that area of support or resistance is going to be. So we do this by combining them together. We can see here that we've got a lot aligning together. We've got the session highs here. We've got a value area high, we've got session highs, we've got a value area low, a value area high. Like, this is a very, very solid level. And if we get rid of the TPOs, we can see how price reacted around this level very clearly. Now, you just start top to bottom. So you'd be looking at this and going, okay, we've got a single print in here. So we're going to align that up with these session lows, and you can see how price came up to it, reacted from it, and then moved away from that area. So once you've got your directional bias, you're looking for support and resistance zones which you can trade from. Now, one key thing to note here is you don't want to make these zones massive, right? If you've got an area of support or resistance on your screen that looks like this, how the hell are you meant to trade from that? How do you know where price is going to look to move around and change direction from this massive box? You just simply don't. So the tighter you can keep it, the better. I wouldn't personally make it any bigger than that. We've got session lows, session lows, session lows, okay? We've got 3 sets of session lows, price breaks below it, retests back to it, and then continues lower. So these boxes need to be as tight as possible. If it needs to be, I would not go any bigger than something like this. Like, genuinely, if you're trying to trade from a zone like this, you may as well just pack up your bags and stop trading now, because you just haven't got a clue where price is going to turn around. You just have no idea. You're better off not drawing levels of support and resistance if you're going to draw them like that. So keep them as tight as possible. That's really important, and they are very solid levels. If you draw a level on and then you look and price isn't reacting to it, then treat it with caution. You want to see that price is actually reacting at this level and we've not just drawn a random one on there. But 9 times out of 10, they work really well. You can combine them together. So if you've got the session high and a value area high together like this, then you can combine those two together. But for me, that's a pretty shit level of resistance. I would be wanting to use this level here, bit of a false breakout, and then a continuation lower. So that's how we develop our support and resistance levels with TPOs. So I've now given you 2 trading strategies, inside day, outside day. I have also given you how to generate a directional bias, and I've given you how to drop support and resistance. If that's not worth a subscribe and a like, then I don't know what is. So make sure you hit the like button and give me a subscribe. It would be much appreciated. So let me run you through a trade which I am currently in at the time of recording this video. This is generated by a directional bias from the TPOs and the market profiles, and my support and resistance levels are also drawn from the TPOs and the market profiles. So let me give you a rundown of exactly how I got into this trade. It's a big one. 5.1 risk to reward is something which I never come across. A little bit nervous about it, I have to say. The temptations to close it at this resistance level are going to be real, but we're going to do our best. So let me give you a quick run through of exactly how I came to entering into this trade. So first of all, we want to ignore this profile because this is the current week that we're in. So we're looking at these whilst we're doing our analysis at this point. I did this analysis on Sunday, and then price has just come down now today for me to get into a position. So first of all, have we got a profile shape here? It's close to a D shape, but it's not really anything, so we're going to put that down as 0. Even if it was a D shape, it's still going to go down as 0 because we've not had a break above or below it at the time of me doing this analysis. So that goes as a 0. Previous days profile shapes, so these 3 here, no, we haven't got anything there either, so that goes down as a 0. Was yesterday an inside day? Was this profile contained inside of this profile? No, it wasn't, so that also goes down as a 0. Then we come on to the value area. This was the previous one, and then this was the one that we were analysing. Has it moved higher? Yes, the whole value area has moved above the previous. So that's a really bullish signal. Then we're looking at today's open compared to the value area. So this is the only time that we look at the current week's profile. We can see that it did open above the value area. So that also goes down as a +1. Then have we got poor highs and poor lows? We've got poor highs up here. Have we got poor lows? No, because it goes 1, 2, 3 and gradually gets bigger. If we had a big step here, if we had 1 and then 3, then I would look to take that as a poor low. And if we had poor highs and poor lows, it would go down as 0. But because we've only got poor highs, it goes as a +1. So now we're on to +3. Have we got excess? So no excess on here, no excess on here, but we do have excess up here. So it is the furthest one away, so it doesn't carry too much weight, but we do put that down as a -1. Then we're looking to see, have we got a trend which is arising out of these profiles? The high here, the high here, the low going higher, the high going higher, the low going higher. Yes, we have. So that brought me to a conclusion of having a TPO of +3, which we can see here. Now, I align this with good fundamentals as well. Obviously, with everything going on geopolitically at the moment, it's a little bit difficult to generate a good fundamental bias, but it can be done. So I've got to the foundations of we've got a good fundamental basis here. I believe this sell-off was from Trump saying that we're having an extra 2 weeks added to the ceasefire, and I think it's probably a load of nonsense, to be honest. If we have listened to Trump so far throughout this war, there's not too much hope that this is going to be a ceasefire. So my fundamentals are good. Right now I'm looking for areas of support. So my initial level that I had was from this value area high and from this cave here. We got a bit of a cave in there. So that's where my initial level came. We had no reaction around it. So then we came down to the next level, which I took from over here. We can see we've got a session high and we've got a value area high. So that is quite a solid level. And if we wanted to put another one in below, we could take this session high with this session high here, which gives us another level of support below. So if I was being really safe in this trade, I could extend my stop loss just slightly below that level as well. That's how I've got my directional bias, and that's how I found my level to trade from. My entry, my execution, well, we'll save that for another video because it's been a bit of a long one today. But I hope you guys have learned something. We've gone through massive amounts of value. So please go away, try it, give it a go, and let me know how you get on in the comments. If you want one-to-one tutoring, or if you want a trading school, then check out the link in my description. I've just opened a brand new trading school which has 9 modules inside and is designed to take you from a complete beginner to an expert. I've got technical analysis in there and I've got fundamental analysis in there. I teach you how to manage capital properly. I teach you how to collect data, how to read data, and how to alter your strategy based off the back of your data. It has absolutely everything you need in there. We're starting to build a really nice community of traders in there as well. So we've got a free section. If you don't want to commit to jumping in and paying for something just yet, please join the community. We will happily welcome you inside. Now, I hope you've enjoyed today's video. Please hit that subscribe button down below. Give it a like. If you've got any questions, queries, or any videos which you'd like to see, then drop them in the comments and I will see you next time.